Hey everyone, in this video I was going to provide a brief overview of what's going on with Canoo stock. To do that, I was going to go over the company's August 14 earnings call that the CEO provided Wall Street investors with the insights. So let's get right into it. Starting with the CEO saying that on August 4th, 2023, the company settled the SEC matter regarding the acts of former executives. This has been a significant burden on the company's time, resource, and process, and it's taken 28 months and millions of dollars to settle. So, which reduced their ability to access capital markets thanks to higher cost channels during this period because of the uncertainty. And that's always the case when you have more uncertainty. It's harder for a company to operate. Now that the matter is behind it, that can allow Canoo to negotiate better terms with lenders and creditors, and also better terms with suppliers. Because think about it, if you're a supplier trying to establish a relationship with Canoo and you don't know what the outcome of these matters are going to be, you don't know if the company's going to have money available to pay you back, and so you're going to be hesitant to make deals with Canoo. But now that this is settled, that's what the company is saying. It can access capital markets, it can access better funding because its counterparties to their agreements can feel more confident about the company. Moving on, management said that their sales strategy has been one fleet sale equals hundreds or even thousands of vehicles sold on a multi-year delivery with high-grade credit and long-term partnerships. So Canoo is focusing on fleet partners, partners that it can sell hundreds or thousands of vehicles to on a multi-year contract, and partners that have excellent credit so that Canoo doesn't need to feel pressured in terms of feeling like they might not get the money owed to them, right? So that's the kind of ideal relationship Canoo is looking for, and management is saying that they already have $3 billion worth of an order book. 70% of that is to commercial customers. However, only 750 million of that 3 billion is committed orders. And that gives them the ability to not be building units and then trying to sell them, right? Because the units that Canoo is making, they have customers attached. They know exactly who's going to get the units that they're building. They're not going to build these units and then try and sell them. They've already got orders for them. They're building to order. And so that reduces the risk to a degree, because that reduces the chances that these inventories will be left to Canoo without a seller, and needing to offer discounts and incentives to try and sell them at lower prices, lower profit margins. And then on August 11th, the company closed another Fortune 100 customer agreement to purchase vehicles for their national fleet. The CEO goes on to say that the reason they've been slow to ramp up production, slow to get revenue going, is because they're focused on having a low recall rate, a low warranty impact, and battery performance. So they're doing a lot of testing. They're doing rigorous testing, not just trying to prove if it can last a certain amount of time, but trying to prove how long it can last the vehicles without needing to be replaced. Where are the issues going to come up, and trying to fix those issues before they send these vehicles out into the market and see the issues start to pop up and then have to do a recall, because in management's opinion that could be more costly. So interesting strategy, and it remains to be seen if this is going to prove to be smarter than just sending out these units into the market, letting the clients tell them what's right, what's wrong, and then bringing them back and iterating and fixing. All right, so I hope this video provided some insight into what's going on with Canoo stock. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.